Afternoon, good morning, good evening, everyone. Depending on where you are joining us from, I'm delighted to welcome you all to the inaugural webinar of the Fintech and Payment Institute's monthly series, where we'll delve into the most cutting-edge topics shaping our industry today. My name is Betty Akest, and I'm thrilled to be your moderator for this exciting session. As we navigate through the rapidly changing landscape of digital payments, it's clear that the future is not just about convenience, but about innovation, security, and inclusivity. Today, we have the privilege of hearing from some of the brightest minds in the fintech world, who will shed light on the trends, technologies, and regulatory changes that are transforming the way we transact. But before we go into our discussion for today, let me set the stage with a compelling thought. Imagine a world where every transaction is instantaneous, secure, and accessible to everyone and everywhere. This isn't a dream, right? It's actually a reality that we are building right now. Our topic for today, the future of digital payments, couldn't be more timely. With advancements like blockchain and cryptocurrencies making headlines and consumer behavior shifting dramatically post-pandemic, it's important that we stay ahead of the curve. Our esteemed panelists will explore these dynamics, offering insights that will not only inform, but inspire individuals passionate about fintech. So without further ado, let's begin our discussion into the future of digital payments. Please join me in welcoming our distinguished panelists. We have Priscilla Hazel. Priscilla Hazel is a group head commercial at Insano Limited. She holds an executive fintech certification from University of Oxford and has extensive experience in business leadership, financial services, and commercial strategy. She's a board member of multiple fintech companies in Ghana and Cote d'Ivoire. She is multilingual and dedicated supporter of Rotary International's humanitarian efforts. You're welcome, Priscilla. Our next panelist, Solis Kideso, is the group operations lead for Insano. She has over a decade of experience in fintech infrastructure, degree in electrical engineering from KNUST, and an executive MBA from Lancaster University. She's a specialist in solutions development, operations management, platform design, and project management. Yeah, welcome, Solis. Our final finalist, Dr. Augustina Odame. She is an economist and regulatory consultant and an expert in regulatory compliance. She has extensive knowledge in business setup processes across Africa. She also has very remarkable record in market entry and expansion and regulatory compliance. So this includes licensing financial technology companies and across various African countries. Thank you so much for joining me here today. So let's get started. I know that before COVID, most of us were going into the banking halls. We're used to that. Most of the times we write our checks if we want to pay for some transaction, or we go to a shop and then we pay for groceries and all that. But COVID came in and changed a lot of things, right? So because we didn't want to transfer the disease to someone else, we limited the use of money. Now, my question goes to Priscilla. Priscilla, how has consumer behavior towards digital payments changed post-pandemic?
Sorry, I needed to unmute. I agree with you. COVID was like a catalyst for those of us in the financial services space, especially the technology space when it comes to digital payments. And if you look at the numbers from even mobile money, if you use mobile money for Ghana, mobile money significantly grew after the pandemic. And consumer behavior has changed towards digital payments, mostly because after the COVID period, and some of the reasons are because, I mean, during the COVID period, you had to there was no contact. You had to be able to transact without having to interact directly with people. So there was a shift for people who traditionally would not have wanted to use digital payments. You saw a lot of these people shift towards using digital payments. It was almost like their hands were forced because they didn't have a choice. And the good thing about it is after this shift, after COVID, most of them stayed. And they stayed because of the convenience they realized with digital payments. So COVID-19 has significantly impacted how people have transcended to start using digital payments, not just in the younger generation, but even in the older generation. I have like aunties and uncles who before COVID would not have tried making payments online or use mobile money in any way, but now they become almost supporters and encouragers of people using mobile money. So COVID-19 was strong in helping that shift, at least in Ghana, from what we see. Yeah.
Yes, thank you, Priscilla. So even for the old, it has made them embrace technology as well, and which has made digitization very good here in Ghana and even Africa as well. Solace, what's to add on to what Priscilla just said? What do you think are some of the most significant trends currently shaping the digital payments landscape?
Thanks, Betty. So Priscilla said it all. So we've already seen the customer behavior shifts, a clear difference before COVID and after COVID. But on the technological side as well, we have seen some breakthroughs in some technology use cases that actually enhance the digital offering. So over the past decade, we've had a growth in terms of digital analytics, going from big data to machine learning to predictive analysis now with our Gen AI, which is spurring a lot of innovation in terms of customer experience. We're also seeing a lot of advancements in terms of cybersecurity as well to try and help safeguard the new norm and make sure that people's trust is not misplaced. I think the recent ones that are even more exciting are the new channels that can be used. So over the last decade, we have seen, especially in the developing world, the uptake in mobile payments, which is very different from the West where cards are predominant. But now there are new technologies, especially when it comes to the wearables. So people are already wearing smartwatches, they're already getting used to the experience, and there is a plan for all these new gadgets to be used. So you could have everything from smartwatches to smart glasses to your smart ring, which could mean that we could pivot from having the wallet or the card or the mobile phone to your everyday items that are on you as well, being used in digital payments. So that's also a very interesting trend that is going on. And of course, you know what's happening with cryptocurrencies. It's still not mainstream yet, but there has been significant innovation in terms of the infrastructure using blockchain, and also the fact that it bridges gaps that the traditional finance system hasn't been able to.
Great, thank you, Solace. So I was going into the cryptocurrency as well, but now that you've touched on it, let me quickly ask you something. What do you think are the potential to cryptocurrency becoming mainstream payments methods now?
In terms of the technology, it works. It bridges things like cross-border finance because then you don't have to do, let's say, currency exchanges and stuff. It serves as sort of a conduit for easier, safer processing of transactions. It's also cheaper than the traditional sense. But then it has sort of evolved from being just a payment tool or store of value to a sort of asset, because now the value of Bitcoin, for instance, is sort of tracking like the way you check a stock price. So then you have additional use cases that perhaps were not really envisaged in the digital payment sphere only. So it has the potential at that level, but then there are significant factors that have to be addressed when it comes to regulation. If regulation doesn't accept it, then becoming mainstream becomes a bit difficult because the legitimacy of it as a tool then is questioned. Also, issues around the fact that it allows for anonymity and has become a favorite tool for dark transactions, if you call it that. So for it to become legit and transparent, we have to also rethink what that module serves. And then I think finally, cybersecurity again, because you've had instances where people have had their wallets emptied overnight because of cybersecurity. You are having crypto exchanges hacked and stuff like that. So there is a need for that also to step up if this is going to be a mainstream tool.
Great, thank you, Sole. So the bits about regulation, technology, and also people being mindful about the cyber attacks that comes along with the cryptocurrencies and Bitcoin is very important to note. Okay, but it brings me to the conversation about trust. Okay, so how important is consumer trust in the adoption of digital payments? Because people need to trust it, and it helps people to it helps us to ensure and then prevent fraud in this increasing digital world. I throw this question to Priscilla because she's more of like the consumer expert here to share some light on this.
I think that it is a very important question. And trust is very important, and even not within the digital space, in our lives, with the interactions with people, trust is an important thing. So when you translate it to digital, it becomes even more important because it has to do with money, at least on my space and where I deal with. We're dealing with payments and money. And when it comes to money, there needs to be trust. So when we talk about trust and it comes to consumers, it's like paramount for people to be able to shift from using traditional means of payments, to be able to even shift to digital means. One of the main things that's important to them is trust. I mentioned COVID-19, I said people sort of shifted in that period. A lot of them because they didn't have a choice. For many people who had not shifted, the reason they had not was because of trust. They did not trust that the service was stable. They did not trust that their money would be safe. They did not trust that someone would not go after their money or they'll lose their money. There was a lot of different reasons why people would not trust digital channels. So trust is paramount. It's trust out is what will make people remain using digital channels. Because if somebody was using a traditional channel and had to shift and start using the digital channels and they had an experience where the trust was in question, it's very easy for them to go back to the traditional channels. So for businesses, even regulators, governments, anybody who's thinking about pushing the cashless economy or the cash light economy, or us as fintechs and even those in the financial services trying to push our products to customers. One of the main things we need to build is trust. So make sure your system is reliable, make sure people have access to their money as and when they need it. If there are issues, they are resolved on time. It helps to keep people using the service because there are other reasons why they should use it, like convenience and other things. But if you're able to solve the trust issue, then people will keep using the service over time. So trust is paramount.
Yes, exactly. And that's why the digital space is now helping the unbanked as well, because I'm sure the unbanked is also mainly based on the trust, because they don't trust, like you said, the technology, the server. I mean, someone will fraudulently take their money and all that. But that brings me to Dr. Odame. When we talk about the regulations, okay, or the regulatory authorities and how they are able to forestall these challenges, what are some of the biggest regulatory challenges facing our digital payments today?
Okay.
Thank you very much for that question, Betty. I think when Solis was speaking earlier in response to crypto, she essentially highlighted the importance and the trade-offs when it comes to regulations. So you would recall that she mentioned that some of the characteristics that make crypto so appetizing and appealing, right, and attractive to us also have their downsides, which we have to control for. So the anonymity that people like so much also means that it's favored by people who are doing dark transactions. The decentralization means that when someone runs away with the crypto keys, there isn't really a recourse mechanism because there's no central authority that is in charge of that. And we also look at the security, where we have had some cases, whether genuine or not remains to be determined, because once someone comes out and says they've forgotten the key, there's no way to check, so these sort of hints at the balance and trade-offs when it comes to exploring the benefits of technology for our use. And that's why regulations would usually come in, right? So whenever you have technology, the appeal of technology is that it's fast, it's cost effective, anyone can get up. We have the tech startup stories of people starting technology companies by writing their business plan on the back of a kitchen towel, etc. And it's because technology has no borders, technology is easily reachable, etc. But that also has its downfalls. And so let's again mention cybersecurity. Priscilla has touched on trust. And these are all reasons why whenever we have technology interacting with a regulated space or a sensitive area, be it finance, health, etc., there's usually the need for there to be a central regulator to regulate these implementations of technology, just as they do in the analog world, so to speak. This is just giving us context for the regulatory discussions that we'll be having. I would say that against this backdrop, some of the greatest challenges that are being faced at the moment in digital payments will have to do with, one, navigating complex regulatory and licensing frameworks. I see Priscilla nodding there because once you have interacted in the space based on operations, based on commercial, you know that you cannot get away with it. But then just as technology evolves so rapidly, what that means is that just as you are always playing catch up with the sophistication of your customers and the sophistication of bad actors, regulators also have to continuously run after innovation in order to effectively regulate the landscape. What ends up happening then is that the regulations are often being updated, and sometimes there's a lot of catch up, which creates regulatory gaps here and there, or new directives being issued, and then compliance has to be immediate. Even on the operational side, sometimes you realize that new regulations come in response to vulnerabilities that are being exploited. And because it's affecting one, trust on the consumer side, but also you are losing money, all these things have to be quickly enacted. And it creates quite the complex compliance burden and task for industry players in the digital payment space. I think also, just as the technology continues to evolve, the regulations continue to catch up with it. And often, because of bad actors, they tend to go for the riskiest, to protect both consumers and partners against the riskiest scenarios, which are often not necessarily the most common or the most pertinent issues, from the perspective of the users or the operators. And so I think Solis and Priscilla have touched on trust and cybersecurity, which are all issues that are dealt with on the regulatory space. And so these are some of the challenges being faced, in the most pressing challenges being faced in the digital payments landscape.
Yeah, I can already imagine how complex your role will be, especially in the regulatory side, where you are trying to get license for one country, you go to another country, and I mean, the process is also very different. And
exactly, Betty. Yeah. So one can imagine, we talk of the continental free trade area, we talk of enabling intra-Africa trade, but just trying to expand into neighboring Cote d'Ivoire or Togo, it's a whole nother ball game. First of all, the fact that it's a francophone system which has a central bank of West African, like the Francophone states and all that. And so once you move, market differences also affect how the regulators deal with the landscape. So expanding across markets, even expanding your product offerings, all take you into a new regulatory regime. And these things are certainly quite intricate to navigate and can also be quite costly, let's be frank, to navigate. So these are some challenges being faced by players in the space.
Yeah, so I see a lot of complexity and uncertainty in there. Priscilla, what are some of the potential challenges and opportunities you see with global adoption of digital payments? Because here we are talking about the regulatory side of, like, going global, but what do you see when it comes to the digital space as well globally?
Potential challenges and opportunities. For challenges, maybe I'll speak to two, maybe the panelists might want to speak to others. I can speak about, we've spoken about trust, so maybe I'll say three. We've already spoken about trust, but one of the main challenges is trust and how everybody has to ensure, at least the actors have to ensure that that is somehow baked into whatever regulatory policy or product or framework we come up with. That you think about what process you put in place to make sure that consumers will trust whatever system or whatever policy that is put in place, and it will benefit them in the end. One other thing is maybe what Oye mentioned is regulatory compliance. It's a hurdle, especially for the businesses. That's why I see a lot of challenges, because there's so much you have to, compliance is very expensive for businesses. So whenever you want to check all your boxes, cross all your T's and dot all your I's as a business, it becomes very costly because there's so many requirements that regulators expect of you. Sometimes you don't have the capacity to do so, but in order to be able to operate and provide the type of service you want, you need to be able to comply with their regulations. So it causes a lot of friction for some businesses, and it becomes extremely costly for them as well. One other challenge might be security concerns on the platform for many people, and it's a subset of trust. People need to be sure that their platforms are secure, their data is secure, whatever they are sharing is protected, what they agree to is what is applied and not the opposite of that. These are some challenges I see with the adoption of digital technology in general. Now, when it comes to opportunities, I think there's a lot of things. There's a lot of opportunities on my part. I think there's an opportunity for improving your customer experience on the platform. I speak to platform because of what my background is and what I focus on. But really, your opportunity to improving the customer experience, being able to provide data and analytics and information to the customer for them to be able to understand what they're doing, what their transactions are about, providing value to them. I see opportunities there for businesses. There's also opportunity for financial inclusion, because like we've spoken about the traditional forms of payments or interacting with the financial services space. Many people would like the opportunity to shift and be more digital. So there's an opportunity, if we improve, to be able to shift a lot of consumers towards more digital. So there's that big opportunity there for financial inclusion, where those around outside of the formal financial services space will somehow find their way in there. And in effect, it helps the country as a whole, because now you're able to track transactions, you're able to at some point potentially even increase your revenue mobilization, because you can track what people are doing by way of transactions within the country. Then lastly, just generally, there's opportunities when it comes to technological advancements, because now you're looking for ways to constantly improve on the services, the current services we have. And consumers will draw your attention because you see the need, you see the demand for certain services that people are asking for. So there's the opportunity to come up with new innovation within the digital services space for businesses and even regulators and governments alike. So for me, there's a host of opportunities and challenges, but I think the more we dwell on the opportunities, we'll be able to solve some of the challenges that we have there. My opinion.
Yes, right. So challenges being the trust, regulatory compliance, and security concerns, which has cut through everyone's discussion for today. but we see a lot of opportunities as well, which has to do with the technological advancement and also giving customers the experience that they need when they are interacting. Solace, would you want to share something like more into the customer experience, how the global landscape is going to help create or improve customer experience?
Okay, so Bessie, I think looking, for instance, at the use case of banking, what I believe is what AI is going to disrupt in that space is retail banking, because it's going to question how institutions even classify these customers and meet the needs of the customers. So I'm looking at a new paradigm where instead of dealing with us based on the type of accounts that we have or the type of services that we have added on, using AI tools in effective ways will allow the banks to reclassify us per our unique needs and allow for easy upselling, retention, customer retention, because then you really be able to see trends that could lead to churn and could lead to customers underusing your product. So if I look at just this use case, the new digital advancements we are having with Gen AI, with machine learning and the kind of insights or projections they can give us can really change the business models that are at play. And companies need to pay attention to this, because if your customer feels you do not know them enough and are not able to anticipate their needs enough, then they start looking elsewhere. So you would find that certain traditional sets of services may have to refine what they define as a customer, refine what their categorization looks like, and then change what their offerings to the customers are, or face disruption. And I think that's where you're going to see a lot of impact on the customer journey, the customer experience. I think we are going to see new definitions coming up. Hitherto, the broad assumptions has been that let's categorize based on the generations. So you have industries where now there is a different set of services targeted for millennials as against that's targeted for Gen Zs. Now, what you would find is if companies do not evolve and learn how to adapt using these technologies in not the sort of just slapping it on, you have a lot of services, they say they have AI, you can't really even see what the AI is doing or where it sits in that tech stack. But if you use it in effective ways, it can help you actually even break down those customer segmentation and make more use of customer data to better serve them and keep them.
Okay, thank you, Priscilla. So from what you are saying at the beginning of your submission, I was hearing the discussion on the financial institutions as well. And I see financial institutions and fintech playing an important role in the future of digital payments, because it looks like they're working together, right? And I just want to find out, what role do you think both institutions, the financial institution and the fintech companies, would also play in shaping digital payments as well? I
Okay,
mean,
so that means
yourself or Priscilla can
Okay.
answer that.
Yes. Okay, good.
I think, yeah, I think financial institutions and fintechs play a very important role. I mean, there's a whole word like fintech that has been created, which combines finance and technology. It shows how important it is and how even fintechs came about because of the global financial crisis. If you look at the history of how most of these fintech companies started. For for fintechs to have grown and evolved over the years, it's really a collaboration most of the time between financial institutions and technology companies where they are trying to provide value to customers. So through finance, so technology through finance. So we play banks, financial institutions, and fintechs play a huge role because we're able to collaborate. The banks have their areas where they are strong in, and fintechs have areas where they are strong in. Fintechs are able to be nimble, they're able to move pretty fast, make decisions very fast. Banks for a period of years have been regulated and have had processes that they have to adhere to be able to make major changes in the organization. So usually when they come together with the fintech, they're able to churn out products pretty fast. Banks have the data, and they've had data for a number of years that the fintechs can leverage to be able to build solutions and offer value to their customers. So that collaboration between fintechs and banks is, in the end, benefits the customer. So you see that in so many things that have happened in the country. For instance, I can speak to in Ghana. I mean, mobile money has been around for over 10 years. And there have been so many products that have been developed and have evolved over time because of collaboration between fintechs and banks. I can speak to many of them, and I'm sure many of us on the call can speak to. One of such might be maybe USSD mobile banking. I mean, at the time that USSD had just started in Ghana and the telcos had started with mobile money, and most people had to still walk to the bank to do a transaction. Like you want to do anything, you have to take a car, sit in a car, drive to the bank. You have to fill a form, sit down in a queue. You want your money, you have to sit in a queue to withdraw your money. You want to deposit money, you have to sit in a queue sometimes to deposit your money. And I mean, at the time, that was all that we knew. So people would go through it. But you're looking for convenience and how to offer value to customers. So at the point of mobile money, there are fintechs who can build solutions using mobile money as payments and even leveraging on the telco technology. So now products like USSD mobile banking applications were built, where the bank's customers, and this is leveraging the bank's data because you know the bank's customers, you know their data, you know their account, you know their details. So they are able to create accounts. And within a period of time, it becomes almost the normal thing, becomes the norm now. People are able to sit in the comfort of their homes and send money from their accounts to their wallets and their wallets to accounts. And then you go a step further now where you don't even only have to send from your account to your wallet and vice versa, but you can pay people, you can pay for services just from the comfort of your home, which was something that would not have been possible without some of these collaborations. And over time, these innovations have improved. They've gone to apps, they've gone to web portals. Now AI is coming in with regards to some of the things Solly said. So collaboration between financial institutions and fintechs has been instrumental in getting us to this point. And I think it will be instrumental in getting us to the next level of digital payments or digital services, digital financial services.
Yeah, thank you, Priscilla. I hear very good things about the collaboration between the financial industry and fintech. And I mean, the olden days, how you have skew and everything. Now things are fast track. You can sit at home and do your transfers anywhere. So the collaboration is good. But I also know that both industries are very well regulated. So they all have their regulatory bodies and it's guiding what they have to do in the space. Dr. Adame, how do you think the government and the regulatory bodies are responding to the rise of digital payments?
Hey, Betty. I think that the government and regulatory bodies have seen it's impossible not to what fintech, the potential that financial technology has, whether it's being implemented in a traditional financial institution like a bank, insurance company, etc., or within the newer, so to speak, quote and unquote, because currently some fintechs are older than certain banks, but within that space, they've seen the potential that it has, and so they've taken some measures to sort of support the innovation that happens within the space. I think one of them is that they are both developing and updating regulatory frameworks to be able to effectively supervise and regulate the space as it is evolving. The one thing that I mentioned as a challenge earlier on for industry players is a thing that regulators are doing their best to keep up with the space and develop incoming regulation that responds to the new innovations and new products, services, collaborations, etc., being developed by industry. I think the frameworks are being, adapted to address the unique challenges posed by digital payments. I was listening to the response from Priscilla about the collaboration between financial technology companies and traditional financial institutions earlier. And both types of institutions have their advantages that they bring to the table when they collaborate. And it's why they continue to collaborate, even though some people might see them as competitors. But the advantage in the collaboration is that the fintechs are smaller, quote and unquote, right? But that they are more nimble, they are able to adapt, they are able to incorporate new technology, they are able to innovate more quickly, etc., to be able to deal with the evolving consumer needs, changes in markets, etc. But at the same time, it's a regulated space. So sometimes regulation can be, if not designed to be fit for purpose, can be a hindrance to the same innovation that would help development and the objectives of the central bank if they were allowed to flourish. One such objective being financial inclusion, as Priscilla would attest. Another thing is that we talked about consumer trust earlier. We know that the central bank wants to realize the potential that fintech has for the financial services space, etc. But at the same time, it's dealing with money, right? And we know that the central mandate of a central bank is to protect the safety and stability of the financial sector and to ensure that people's monies are not being lost, right? And so what that means is that they have to take care of the consumer aspects of things, which means that data privacy, data protection, consumer rights and recourse mechanism. We've seen that the Bank of Ghana, for instance, has instituted a call line where if you have challenges with your financial services providers, you can call in and get some recourse to your actions, and then also put in place certain measures to ensure financial stability. So adopting an adaptive or risk-based approach to regulation to ensure that they are accommodating innovation without posing a threat to the financial system. And I think one other thing that I can mention is that they've also been facilitating innovation through regulatory sandboxes. We know the Bank of Ghana has a regulatory sandbox. The other regulators, the SEC, etc., some have their regulatory sandboxes in the pipeline. And they are trying, right, to take charge and control for how fast technology evolves. So knowing that technology and innovation operates in a space that is faster than perhaps their supervisory capacity might be able to keep up with. They are creating these regulatory sandboxes which allow for innovations that are not currently provided for in existing regulatory regimes, but have great potential to provide services to the community to come within this container where it's controlled and with limited exposure, be able to explore innovation. That's also an example of ways that they are adapting to digital payments. And I think the last thing would be that they are putting in place some incentive for financial inclusion. We've seen that sometimes when there are certain policies that, try to impose some restrictions, some provision is made for financial inclusions so that we can promote access to the unbanked and the last mile in financial service delivery.
Okay, thank you. So I just put down some pointers where we spoke about the potential in the space, both the financial institutions and the fintech industry. And hence it's very important for regulators to really look into it and make sure that it is secured. And I mean, we've talked about trust since the beginning of this discussion, and also provide support by putting in frameworks in place, so it regulates the system very well. We also look at data privacy because we are dealing with people's data and information. So it's best they are in there to check all that. And also to make sure that the system is stable financially. I mean, those days with the financial crisis and everything, it was not an easy thing. But I mean, because of regulators, I mean, some people were able to, retrieve their money and there was some stability in the system. And it also brings about innovation because if the regulators are also not thinking ahead, then we are stuck behind because they don't understand what is happening in the industry. You mentioned something about sandbox, and because of the audience we have people who are very new to fintech. I would like Solace to give us what it means really. What's a sandbox? What does it mean in the space?
I think the name is coined from the concept of the sandbox in which kids play, especially when you watch the Western movies and stuff, you see this bordered square or rectangle area where there's a lot of sand. And the idea is that it's sort of like a safe zone because the sand is going to buffer the kids against getting hurt and all that. So similar concepts that for the regulators create this sort of regulator space that is enclosed and allows for whatever new innovations that are being brought up to be deployed. In this space, the regulators can observe the various use cases, can observe customer behavior, can observe if any risk comes up in that control space, because then it is not released to the general population. And ideally, it gives a sense of control that they would need to have in order to be comfortable to pass that innovation. So I think it's sort of a step towards meeting innovators halfway to say, okay, we know that regulation most of the time cannot keep up at the pace at which innovation runs. But let's create this safe space where we can observe for a certain period, where we can have selected people participate, use the product, give feedback, raise any concerns, ideally before it is released to the general population, and thereby giving them an easier way to sort of accommodate these innovations that may sit in gray areas pertaining to regulation, but they can then become a bit more progressive in allowing these innovations to improve people's lives and still safeguard people from the negatives, because ideally the expectation is that any negatives should come up within the period in which this innovation is hosted in the sandbox. So there are different ways in which they are implemented by different regulators, but essentially this is the purpose or objective.
Okay, thank you, Solace. Thank you for that explanation. I would move to Priscilla briefly. Okay. The thought of having developing countries also into this digital payment space. We have challenges with that. I want you to just delve a little bit into some of the challenges you foresee for the developing countries. And if you have some little solutions to them, you can share that as well.
So challenges for digital payments when it comes to developing countries.
Yes.
I mean, so Ghana is considered a developing country. So I can base my reference on Ghana because we're in Ghana. I mean, when you look at countries like China, the US, and you see where digital payments has gotten to, I'll take it from two angles. There are some things that I think we are doing positively here, and I won't even consider them challenges. I think they are quite forward thinking on our part on this side of the world. And there are some things that I think that we definitely need to improve in order to be able to compete as a developing country. So I'll talk about the opportunities I've seen and the value we've been able to do. For me, I'm really fascinated by what mobile money has been able to do on the continent. I was recently telling some of my friends that I've had the opportunity to travel to a few African markets and experience how payments works in these markets. And there are some markets in Africa and even in the developed world where you don't have real-time payment processing. Like you can't send money in real time. And I think sometimes when you're in Ghana, we sort of take it for granted how fast you can take your phone and say, I'm sending money to this person, and instantaneously the person receives the money. Like you can take your mobile money, your phone, you can take your bank app and you want to pay a merchant, and instantly the merchant sees the money has hit their account, or you're sending to your friend, and they ask you to pay someone, and instantly, within seconds, even with remittances, somebody standing in the UK wanting to send money to Ghana, they can be standing at a store, or they can be using their app and say, I want to send money to my mother who lives in some part of Kumasi or in the northern region or in the Bonga Hafo region. And within seconds, your mother can confirm that she's received money in her bank account or wallet. And sometimes we take it for granted what value this has, because this does not happen in some African countries and even some developed countries. Like the concept of real-time payment processing is not something that transcends across all the different markets. It's something that governments and different companies are working to be able to make it happen. And it's something that I think is a value that we've been able to create. And we should be proud of ourselves as a country and as people that we've managed to make this happen. Obviously, if you go into the details of it, when you say real time, people will know that it's not really real time. It's that people have made it possible for it to look like it's real time for you. So it means people are putting the work to make the value come to the customer. So that's one part. And I think it's worth mentioning that we are doing some good things here as developing countries. I mean, when it comes to mobile money, Africa is known to be the continent where more money seems to have taken off. And we become a case study for many of the developed and semi-developed countries. And I think we should take pride in the fact that we're able to create something that works for us and it seems to be thriving and we can innovate on it. Now, as a developing country, there are so many things we can also do to be able to provide value. Despite the fact that we have technology, we've managed to do instant payments. If you are someone that likes to shop, maybe you use Alibaba or use Amazon, just the experience of having to shop and the price point you pay for certain goods and services and having these goods being delivered to you seamlessly and easily, I think that would have created more value for us, where you cannot just do it within Ghana, but you can do it across the continent. So you can shop, maybe it's coming from Kenya, you can be certain that maybe in 2 days or 3 days, it can be at your doorstep because your address system works, your road network is good, the logistics are good. So you make such a request and you don't have any problem because you know that somebody has thought about the operations of it, somebody has thought about the logistics of it, somebody has thought about the price point to make it worth your while. These are some of the challenges that we have for me on this side of the world, that if we improve, we become comparable, then people can build solutions on top of these services. Because e-commerce and all these big giants work very well and seamlessly, not just in their countries, but across the globe, because they've been able to fix some of these issues that we don't have fixed completely in this part of the world, at least where I am in Ghana. So these are some of the challenges I see that we will have as a development country or developing market, that when we improve or we're able to fix, we'll be able to, like companies will be able to very easily innovate and come up with different solutions that will create value to consumers.
Thank you, Priscilla. Dr. Adame, you want to add on?
Yes, I wanted to add something quickly. I think one challenge stroke opportunity, just like Priscilla described, again, would be the customer segments that are being served so far. Now, I mentioned financial inclusion earlier, and financial inclusion is essentially making it possible for people who have traditionally not been able to access traditional financial services to be able to access some financial services through digital technology. So because you have mobile money, you might be able to, receive remittances like Priscilla was saying. And because you are receiving remittances, there might be some services that might be added on, so savings, investments, etc. And that's one of the reasons why financial technology players, regulators, and really the world at large was very excited about fintech when it emerged on the scene. But as we can see, and Priscilla and Solis would attest to it, currently, fintech, even though we say fintech, it's mostly payments. We've not quite moved on to the next level when we are tackling on financial services, because the whole idea was that people having access to mobile wallets, etc., will be able to, get them into the savings mode. They save, it's all serves as part of resource mobilization, right? So somebody's savings is somebody's loan. Somebody's saving is, investment, etc. And we'll be able to do that. So we still have that challenge and opportunity to expand what we have, to be able to actually realize the full potential. You hear some players and some industry analysts mention sometimes that the industry is choked. But I believe that there's still a lot of room when you start to critically think about it. Another area of growth or stroke challenge that comes readily to mind is that if you look at the customer profile, most of the customers that are being served by fintech and fintech solutions are still urban, able to read English, because most of the apps do not have local language capability. And then the other thing is that when it comes to local language capability, it's not as easy as I may say it to be, because mind you, there are people who can speak Twi or Ga or ever Dagbani with the best of them, but that doesn't necessarily mean they can read and write the Twi, Ga, ever or Dagbani, right? And so there are some thinking around it. It requires some investment. There's a challenge, but we've not broken that gap, you see. And until we breach we broach that gap, we are not going to be able to reach these customer segments with the necessary financial services that fintech hopes to provide to them. And on the other side, we realize that by not being able to effectively communicate and fully serve these customer segments, we also leave them vulnerable. When you send your prompts about fraud, about cybersecurity awareness, etc., the first thing you do is perhaps to push SMS. It's in English. If I cannot read and my daughter is not at home to read it to me, I am not able to get that information. I might forget about it, leaving me vulnerable to whatever. Maybe you told me that I should uninstall and reinstall the app. I did not get the message, and so I did not do it. And so it leaves me vulnerable. And so the opportunity stroke challenge is, one, reaching this gap, and also when we breach it, carrying the customers along, because you're only as strong as your weakest link. And so until we are able to ensure that our customers are empowered, are able to safely access services, going back to trust, financial services is very much trust-based. I recall going out to the field to do some focus group engagement, and we spoke to some people who had been burned by Ponzi scheme investments in the in the Brong-Ahafo region, and they did not want to hear anything about savings or investment because their money to them vanished. So once we lose the trust, it becomes very difficult to reel people in. You need to be able to communicate to people, reach them in a timely and appropriate manner, and bring them along with you as the sophistication develops. The bad actors are moving at the pace of technology, and anybody who is using your system is thus exposed to the vulnerabilities that they are exploiting. So this is another area of growth and opportunity. I would like to see it more as that, because I know that a lot of industry players say, oh, we are all fighting for the same piece of, there's bigger pie out there. It's more difficult pie, but there's more pie out there. Thank you.
Thank you, Dr. Odame. I mean, with the developing countries where internet access is a problem, ECG is a problem, usual doom, so Nigeria is even worse. Plus the cyber attacks and everything, it makes it cumbersome. I mean, the trust we've been talking about from the beginning is still something that is questionable, and why the unbanked are still unbanked. And also you spoke about the fintech space only looking at payments. Okay, so we are looking at just mobile payments in the fintech space. My solace goes to Priscilla. Solace rather. Briefly, what role do you see mobile payments playing in the future of digital payments? Briefly, I know Priscilla has touched on it, and Dr. Odame has also touched briefly on it. So if you see the future of mobile payments.
It's our hope, like Dr. Odame mentioned, that other aspects of finance would come into the sphere. So now, yes, it's mobile payments largely, but are we going to move into the era of mobile investments? Are we going to look more into mobile savings? And are we going to bring up a lot more use cases that would allow people to get more value from the conversation? I think that we cannot underrate mobile payments because to a large extent, it has actually shown what speed can do for the economy. When we talk about the sort of innovation we have seen in the last decade, when you have to send money somewhere and it's a few minutes and you don't have any issues most of the time, you find that it has built a new level of expectation amongst people. And people now expect that to translate into other parts of life. So if I'm doing mobile investments, I don't want to come and fill 3-4 pages and wait a week before my account is open, before I can actually start investing. What mobile payments has done is to change how people view financial services. Before opening an account, my first account, I had to go into the bank and queue for a long time, fill plenty forms, add my picture and plenty things. And we are seeing that there's this different experience here. And don't forget that this is the experience that Gen Zs are actually seeing. So we once conducted this study and we found that 8 out of 10 of these Gen Zs that we spoke to did not think of a traditional bank account the way we think of it. They thought their mobile wallet was the bank account for them. And they had actually already gotten used to using that for their savings, for receiving money, for payments. Because mind you, if your uncle gives you an opportunity to send money to you, you are definitely going to remember your number better than remember a 13-digit account number. So there is this level of convenience, there's this level of speed, affordability that they are used to. They don't have COT on their wallets, so bank charges may be very new to them. And the question is, if I'm not going outside the country or paying online where cards are more prevalent, then my usual mobile money should help. So what I see happening is there's going to be also a shift in what mobile payments actually means to the new customer. And it's going to allow for a lot of opportunities for the companies that have invested in that and are still investing in it to bring up a new sort of service and that will be better appreciated by the younger generation. Like I mentioned earlier, I also think that because of all the investments and innovation around wearables and new hardware, we may actually get to the point where we won't be talking about mobile payments. Digital payments is not necessarily hinged on the mobile phone. So cards are one tool, mobile phones are one tool. I could be using my Facebook Ray-Bans and then take a picture of something and pay for it from my sunglasses. I could be using my Apple Watch or my Samsung Watch. I could be using my smart ring to pay for stuff in the shop. So we also expect that there may be a sort of detour so that we will now have to embrace a bigger subset of payment channels than just the mobile phones. But then for Africa in particular, we do need to do the hard work of ensuring that our internet infrastructure is up, our connectedness across the continent, issues around cross-border trade, what we're trying to do with AfTA, and how practical it is on the ground have to be addressed, because whether we like it or not, whatever digital innovations we are building on still need the hard infrastructure to exist and exist in a good format to support it. So all those would also have to come to play.
Hey, thank you, Solace. I mean, you spoke about the Gen Zs, which is also very important because they want their things fast. So they just want to be on their phones, order food on Jumia, and then it's with them, goes to them. So yes, mobile payments, very important, but we need to see how in the developing country, we need to see how we have to bridge those gaps so we advance and meet all the global space that we want to meet as well. Ladies and gentlemen, we've spent an hour and about 3 minutes in this discussion. If you have any question, if you have any contribution, please use the chat. You can put in your questions and your suggestions in there. We'll be very happy to read them so the panelists can answer. We've been talking about trends in the digital payment space. We've also looked at some regulatory changes, and we've looked at consumer behavior and then shifts so far in our discussion. We know that trust plays a very important role in the space of digital payments. Without trust, it's difficult to even get the unbanked. I mean, that's why the unbanked remain unbanked. They need to feel secure. They want their money to be free from any cyber attacks. And so the regulatory bodies now come in with the AMLs, that's the anti-money laundering policies, the KYCs, know your customer, just to ensure that we are doing the right things and people have their money also secured with us. If we have any questions at this point, I can leave them in the chat box. I'm going to read them now. Let's see. Okay, I have a question here. It was sent to me directly. I think this question is directed at you, Solace. How do you see emerging technologies like AI and machine learning further transforming the digital payments landscape?
Okay, so I mentioned earlier that I thought it was going to first change how the customer experience is delivered by service providers, in that it was going to allow for more of a more detailed segmentation or categorization and more tailored service offerings to customers. So that's one of the first ways I think AI could transform the digital payment space. But there are other use cases as well. So one of the very interesting areas is in fraud prevention. We are looking at AI facilitating smarter fraud models, being able to anticipate suspicious transactions and hold them or prevent them from causing any losses to the customer by being predictive, like looking at the trends and telling when there are changes and being able to spot those small transactions that actually evade the broader view. So fraud is one of the very important use cases in the digital payment space. We're also talking about how AI can help us optimize operationally. So you do find that a few vendors and service providers are injecting AI in terms of how to manage our technological resources efficiently, how to make sure that we are running better, how to make sure we are better at spotting issues and fixing them proactively. So you're actually looking at an enhanced operational framework that would reduce lag, downtimes, and allow for the system uptime to be quite optimal. So that's the third way it's being implemented. And when it comes to broad digital payment channels, like, with what the large language models are doing now, where you are able to simulate human interactions and responses, either written responses and even verbal responses as well. It also means that a lot of digital service providers will be able to scale their customer support in a way that is not too artificial. You know, chatbots actually started a conversation a few years ago where you could sort of automate the sort of responses you gave based on keywords that a customer had typed in. But now with Gen AI, you are able to give a more expressive sort of experience and then scale your customer support operations as well, to a point where you're able to serve quite a large group of people. So those are a few relevant use cases, I think, for the digital payment space now.
Okay, thank you, Solace. Let me go to the next question. How significant is the role of user experience in driving the shift from traditional to digital payments? This will go to Priscilla. Priscilla.
How significant is user experience?
Yeah.
I think user experience is important. I see user experience and user interface, like UI, as very important. They sort of go hand in hand. We've talked about how people have adopted technology or digital financial services post-COVID. And quite a lot of that had been because they didn't have a choice. For those who had not converted for a while, most of them didn't have a choice. Like, you needed to be able to make payments, you needed to purchase stuff. This was what was available, so they used it. And we spoke about how trust is important in keeping these people who managed to convert, that when they kept using it, they trust the system they are using, they'll keep using it. They won't want to revert to the traditional means of financial services and payments. But one other area that can help keep people using a product or service is the user experience. How the person interacts with your product from beginning to end, from the first time they hear about your product, when they decide to join, whether it's on the phone, whether it's USSD, whether it's a portal, whether it's even a watch, whatever device, however they decide to interact with your product, the thought process that has been put in to make sure that they enjoy the experience on your platform or in your system or your service. So how you address them, how you're able to customize it and address them by their name, how to make the number of steps you have to take to be able to perform an action smooth and seamless for customers, and how easy it is for them to access certain information when they need it, how you're able to communicate with them when there are issues seamlessly on the platform. So anything you do to make the experience of the customer on your platform easy and smooth is what you deem user experience. Sometimes even the colors you use, where you put buttons, how they're supposed to go, how they even go back and forth between different views. Like, user experience encompasses just the experience of the customer using your platform, how easy and adaptable it is for them. It plays an important role, just like trust does and just like security does. Because if people use your system and it doesn't work, you tap, it's not fast, you tap on it, it's slow, people need their money to be paid very fast. If you had just taken cash and handed it over to someone, I mean, it would have been super fast for them. But now you're on an app or you're standing in front of a stall in a shop and you want to use the digital channel and then it's loading or there's an error, you might as well just take the cash from your pocket and hand it over to them. So if you improve the experience of a customer using these services, chances of them remaining and increasing their usage of digital services increases as well. But if the experience on the digital platform or digital services keeps deteriorating, the user experience is bad, things are not fast, it's not reliable, they have issues, there's no personalization, it seems very generic and random, it's very easy for people to want to revert to their old way of doing things, especially if it's convenient for them to do it. So for me, just like we've spoken about trust and security, user experience, user interface is also very important in keeping people using these digital channels as well.
Thank you, Priscilla. Dr. Adamesi, you want to add on to the user experience question?
Yes, I just want to add something quickly. I think that User experience, yes, like Priscilla has said, is very important. And sometimes people do not realize exactly how important, because user experience in a way is not just about the nice to have, okay, this is pretty, but it shows whether you even thought of the particular customer that you claim you design a product for. I'll give a practical example. So for instance, if you design a product for market women, or for mothers, new mothers, and you don't have support after hours, you did not design that product for them. Because I'm not going to be I'm not going to be doing the financial transactions, recon, checking on my payments, etc., at the market, in the midst of all the noise, in the midst of the foot traffic coming to my store. That is not when I am going to be accessing your app or the financial service you are providing. I'm going to do it when I finally get home to Kaswa, maybe after 11 p.m., or when I wake up in the middle of the night to feed the baby, that sort of thing. And so it's not just about, okay, the design is nice, it looks good, my app looks better, but it actually is a product differentiator that quite fundamentally exposes one, whether you did your market research about the customer segment that you claim you are serving. Two, whether you did your research and understood exactly what their needs are, how they will use your app, etc. And so UX and UI, the importance that they have in promoting digital payments and in pushing both the service providers and all the services that they are providing cannot be understated.
Okay, thank you, Dr. Odame, for adding that as well. I'll move to the next question. So it says, please educate me a little on Bitcoin. I think I heard Solly speak about it becoming a method of payment. Solis, this is for you, please. Bitcoin.
Okay, so I'm not really sure how to tackle that question. So Bitcoin, okay. So Bitcoin is a cryptocurrency that was envisaged by a certain gentleman that we are still trying to find as of now. And the idea was that you would have, the value of an asset is usually in how difficult it is to come about it, or how finite it is, or how rare it is. So if you are buying gold, for instance, or you are buying commodities, there's a very different value set you're talking about, because before you get the gold, there's a whole mining to get the ore and refine and what's not. And this is what creates its value. So it's scarce, it's precious, people need it. During one of my readings, I found that salt, for instance, was very precious at a certain point in time because of how rare it was, right? So Bitcoin has, it's a cryptocurrency, but it has in its basis that there's a certain finite quantity of them. And then there is a whole mining process to validate and actually add on to the blockchain that maintains the ledger of Bitcoin transactions. So it's sort of like a digital coin, which has a certain value attached to it. Now, in the early days when it was practically like the value was nothing, because we're now starting to get people to adopt it and all that. It really came up as a means of payment as well, because I would purchase Bitcoins with my dollars and it's pegged at a certain value. And because it's pegged at a certain value, I can use it to purchase something of par value, right? And now what we have found is that over the years, that value has risen quite a lot compared to what it was in the beginning, because then again, there is increased demand for it, and where there is demand, the value goes higher. And Oye is better at explaining economics. I'm an engineer, so I would leave it at this basic understanding. So Bitcoin, for instance, which initially we thought of as a digital payments tool that could sort of bridge the gap in terms of trading across the world. It gave you this anonymity, so you can buy for something no one knows it's you who bought it. You want to stay off the government and tax people, is the best tool for you to use. However, it has evolved into some sort of investment asset class because the value has grown. So now it's worth it to have a few, because as the value appreciates, you actually make money, because it's now more valuable than when you purchase it, or the vice versa could also happen anyway. So then I mentioned that something that started as a payments tool now has sort of evolved into some sort of investments or assets tool. And if you look into regulatory purposes, the regulator for payments is very different from the regulator for investments, right? So then you are having some sort of clash about who is even regulating this new novel idea or this new innovation. So Bitcoin, I'm not sure I've explained it the way the enthusiasts will explain it to you, because they will probably tell you all the economic benefits and stuff you can get from it. But I'm coming from just the technology sort of fintech sort of position of where it sits currently. People have Bitcoin, they want to use to make payments, they want to do transactions. At the same time, they may want to hold it so that they can get more value from it. It's serving two purposes. And it's built on the blockchain sort of infrastructure, which says essentially it's decentralized. So no one person controls what happens with Bitcoin. And like Oye said, that in itself is a regulatory flag, because who do we hold accountable when things go awry? So I think we essentially are dealing with a technology that was to help well, I don't even know what to say, like take away the power from fiat and sort of make it easy for people to pay each other, trade with each other, communicate with each other digitally, and get stuff done. And then now you have a case where all the regulators now want to come into it, because it has actually gained a relevant following and a very relevant value as well. So that is my explanation. I'm sure you can get more on YouTube, because it explains a lot more about it.
Thank you, Solace. Dr. Adame, you want to add on?
Yes, I just want to add to what Solace said about the two aspects of Bitcoin or cryptocurrency in general. So what you would realize is that on the payment side, right, the government, the central bank can, for instance, make a statement and say, oh, it's not legal tender, and so you do it at your own risk, right? Because of the anonymity, etc., etc. There's no way to identify, some of these things, and so at best they can say that, and that's that. But an aspect that increasingly central banks are realizing that whether they like it or not, they are going to have to pay attention to it. Is on the digital assets part, which Solace mentioned, where people are using it more as a speculative asset or an investment, right? Hoping to gain from the various fluctuations in the price, the market price of Bitcoin. And so what you realize is that increasingly more and more regulators are coming to the idea that you can't say you are not regulating crypto altogether. You can't keep that stance of, okay, you can do what you want, but we don't know about it, because I remember a recent report that I read a while back. For some reason, the specific reference escapes me, but you would see in a report, and they are reporting that Ghana is in one of the top 5 crypto trading countries in Africa. So whether or not you say you are regulating it or not, your people are buying crypto assets. So at some point, you are compelled to create some sort of container around it so that you can protect the people that you have been mandated to protect financially. So a lot more economies, a lot more regulators across the globe, not just in Africa, are coming to the realization that on the asset side, you cannot fold your arms and say, okay, I've not seen crypto. You are going to have to grapple with it at one point in time or the other. And so you realize that increasingly are thinking about it. I think even in Ghana, it's one of the points of engagement because, like I said, it keeps coming up in reports that Ghana is in the top 5, Ghana is in the top 3. So you're having to avert your mind to it and say, okay, I have to look at it. I have to assess it. What am I comfortable with? How do I put at least some container around it so that I exercise some sort of control or protect my citizen to the best of my ability using the tools, there are various regulatory tools available to me, given that crypto is by design supposed to be decentralized, anonymous, etc., etc.
Yes. Thank you so much. This is well explained as well. Thank you, Dr. Odame. Thank you, Solace and Priscilla. We have just a minute to wrap up, and the questions are just flowing. I don't even know what to do, but okay, someone is saying, congratulations, ladies. This discussion is really timely. This knowledge sharing. This is knowledge sharing. Thank you. Thank you too. So what we can't take all the questions. I mean, there are so many. We have just 1 minute. So this webinar will be placed on our social media handles, which is on LinkedIn, YouTube, and Facebook. So kindly visit those pages, like and follow, and then you can put the questions there. We'll do well to answer them one after the other. We'll be doing this webinar every month on the every third Tuesday of the month. So go to the social media platforms and then like and follow for notifications. You'll be alerted on when our next webinar will be, and you don't want to miss it because we have very exciting topics we are going to talk about. We are going to have very good panelists coming in to talk to you, just like my 3 wonderful women did today. So I'd like to say thank you for coming, my audience. Thank you for coming. Thank you for wanting to, upskill yourself in the fintech space, the enthusiasts who want to know more and come into the space. It's good you are here, and I believe that you've learned a lot. Please join our subsequent webinars, and I know you'll learn a lot from that too. Priscilla, Solace, and Dr. Odame, it's been nice having you here today. I hope I'll definitely invite you again. You come,
Thanks
right?
for having us. Thanks for having us.
Thanks
It's
for
been
having
great
us,
having
Betty.
you. So thank you all. It's 5:01. We would like to close our session for today. See you all in our next session. Bye.